Main Street shopping habits are in focus on Wall Street. In today's cover story, the medical sector gets a tech edge. Plus, how LinkedIn's overtime scandal is having a ripple effect on big and small businesses. And tallying up the score from a surprising earnings season. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Wednesday, August 13th. In today's First Look, the Dow loses a grip on gains, slipping back into negative territory for the year. The blue chips fell 9 points yesterday. The Nasdaq 12 and the S&P 3. Gold was up $1. Oil tumbled 78 cents. King Digital gets crushed on earnings. The stock fell 22% after the close as a Candy Crush game company reported earnings that met expectations, but sales were weak, and the company also lowered its outlook. And the federal government deficit is down 24% compared to last year. Bob Iaccino, Tethys Partners, is joining us now to tell us what's on tap for the markets today. Good morning.
Good morning. How are you?
I'm doing wonderfully well, and I know you keep a close watch of what's going on with oil. We're hearing reports that there is an actual oil glut happening. How will that affect investors and consumers?
Well, it should do well for both. If you think about it from a macro point of view, the short-term geopolitical spikes notwithstanding, the U.S. is a flood of oil. Canada is flooded with oil. Supplies continue to increase. U.S. is approaching the second largest producing country status. So I think that there's oil on the market, and anybody who moves oil, physical oil on ships, as Tethys does, knows that your macro view, you have to be bearish oil because there's so much of it. Having said that, the geopolitical spikes will move it up and down, but you can bet that over the next 2 to 5 years, oil prices are going to continue to head lower. Good for the consumers, good for the economy. The oil we have here creates jobs. Consumers pay lower prices at the pump. That takes that sort of implicit tax away from the consumer.
How critical will the retail sales numbers coming out today be for traders?
I think they're pretty important. The market needs something to bounce off of. We've had about 92% of the S&P report now. EPS has been good, top line revenue's been good, guidance has been fair, yet the market struggles. We're not screaming to new highs, and that's because of the geopolitical overhang. If you can get retail sales, get some of the retailers kicked in with higher guidance and higher top line numbers, that could be the next thing that sparks us higher if the geopolitics calms down a bit.
Thank you, Bob.
Thank you.
Chuck Hopla brings us an early glimpse of what's in store for retailers. Hello, Chuck.
Good morning, Angie. As traders await those critical retail numbers, inventories are surging. Import volumes at major U.S. ports are expected to hit an all-time record in August. Retailers are stocking up for the back-to-school and Christmas seasons in fear of a shutdown at major ports on the West Coast. Contracts for those workers expired July 1st. The union and Pacific Maritime Association have yet to come to an agreement on a new contract. The National Retail Federation says if talks derail, it could pose a threat to GDP.
We found that a 5-day shutdown would cost the U.S. economy about $2 billion a day, and that would grow exponentially the longer that a shutdown were to go on. So it could have a pretty significant effect on the U.S. economy.
Jonathan Gold says the NRF remains hopeful as talks between the union and Pacific Maritime Association picked up again last week.
Tech giant Apple is said to be ramping up production of iPads ahead of the holidays. Bloomberg News reports mass production of the new 9.7-inch tablet has started, and the device will likely be unveiled within the next several weeks and on the market by the end of the year. Apple CEO Tim Cook is out now with his thoughts on the company's diversity, which he says could use some improving. Among Apple's 98,000 employees, 55% are Caucasian, 15% Asian, 11% Hispanic, and 7% Black. 30% of the workforce is female.
Car production at Chrysler plants is slowing down as volatile weather rips through Detroit. 4 of Chrysler's manufacturing plants are delaying production schedules. Chrysler says this week's heavy flooding in the Motor City has closed major freeways. Michigan's Department of Transportation is now scrambling to clear roads after hundreds of drivers abandoned cars when high waters made it too difficult to drive.
A new focus on security is happening at Chrysler. The automaker is establishing an office specifically dedicated to car safety. The Vehicle Safety and Regulatory Compliance Unit will be led by a senior VP. Automakers are under increased scrutiny in the wake of General Motors recalling more than 25 million cars in the past year due to safety concerns. GM created a similar safety office earlier this year.
In a bittersweet move, Jelly Belly ends production in North Chicago after more than 30 years. Maker of jelly beans, candy corn, and chocolate malt balls is eliminating nearly 100 jobs at the plant and moving all of its candy making to California. The factory, little less than 40 miles north of Chicago, was built in 1913 for the Goelitz Confectionery Company, which later became Jelly Belly. Jelly Belly CEO Bob Simpson called the decision difficult, but in the best interests of the company.
Yet another symptom of Atlantic City's gambling misfortunes. A $2 billion Revel casino will soon shut down. Revel is the most recent addition to the city's famed boardwalk, built just 2 years ago. The casino never turned a profit and has been in bankruptcy and unable to find a buyer. The doors are set to close September 10th. It will mean the loss of more than 3,100 jobs.
Job openings hit a 13-year high in June. Employers posted 4.6 million job openings. That's the strongest number since 2001. And a jump of 2% from May. Data finds that there are an average of 2 unemployed workers competing for every open position. The JOLTS numbers are closely watched by Federal Reserve Chair Janet Yellen, who's headed to the Fed's Jackson Hole Symposium next week.
Investor concerns about the Fed's next move, along with unrest around the globe, as more people worldwide keeping their cash on hand. According to the Bank of America Merrill Lynch survey, 27% of investors have scaled back on stocks and moved into cash. That's up from 12% in July.
In today's cover story, Chicago's medical technology innovators are forming a new community hub to foster the sometimes spontaneous sharing of information that can lead to partnerships and often profits. Not far from the city's digital tech hub, known as 1871, the healthcare-related tech hub is called Matter. And hopes are high that it will achieve the goal within that name. In a few months, an empty 25,000 square foot portion of Chicago's Merchandise Mart will be converted into a collaborative workspace for an estimated 200 medical technology innovators. It's called Matter. The concept is to bring entrepreneurial startups in med tech closer to each other and investors.
Investors are downtown, our attorneys are downtown, other entrepreneurs, the vibrancy of the community, you have a lot more interaction here.
Citadine's company has developed an imaging system that helps surgeons see cancer cells clearly and reduce the need for multiple surgeries. It's approved for use in Europe, but is about to begin clinical trials in the U.S.
To the extent that I can learn from others who've done clinical trials and said this worked well for us, this was our statistical approach and so forth, those are very valuable lessons to make sure that the effort, the resources, and the time that we expend is done in the optimal way.
So with $4 million seed money from a state that sees $98 billion earned in health care each year and private donations, the call is going out for applicants to move in.
We're looking for the best health IT, medical device, biopharma and medical diagnostics companies, and the application starts at matterchicago.com.
On a daily basis, this will house entrepreneurs who will be building their companies, building their ideas, and also a place where big organizations, big pharma, will come and meet with entrepreneurs.
And regarding the recent Ebola outbreak, a virus pharma companies have known about for many years, but few have pursued drugs to treat or cure it. Participants said that could change as startups seek ways to create niche markets.
A possible new blockbuster drug sends Intercept Pharma stock soaring again. Late-stage clinical tests will now start for OCA, a treatment for a form of chronic liver disease. Until now, there's been no treatment. The new drug performed better than a placebo in its latest round of testing. Intercept Pharma closed up 16% yesterday. The stock has climbed more than 300% for the year.
The company Exact Sciences surges on approval of a one-of-a-kind cancer screening kit. The stock gained 2% after the first ever test for colon cancer was given approval by the FDA. The test uses DNA samples to spot cancerous growths. It would provide patients with a non-invasive way to check for signs of disease.
As quickly as biotech and drug company stocks can explode to the upside, there's also a downside. Dendreon shares dropped almost 34% yesterday to $1.40. This is a biotech stock that was super hot 4 years ago and traded close to $60 because of its prostate cancer treatment. Now the company reports it's having a significant problem of not being able to pay a bill.
Consumer Reports slams Tesla's Model S. Last November, Consumer Reports gave the model one of its best ratings ever. Now, after 16,000 miles of testing, it cites several quirks, including the center screen going blank at 12,000 miles, eliminating access to the car's functions. In a statement, Tesla says, "We take these actions with the customer's convenience and satisfaction top of mind." Tesla stock last traded up 64 cents to $259.
Consumer demand came close to out of control for PlayStation 4. Sony just crossed the 10 million mark with its PlayStation sales. After reporting back in April, it was struggling to keep up with demand. Microsoft's Xbox sales are at 5 million.
Social media pressure brings a chicken dish back to a burger joint. 2 years after nixing it, Burger King reintroduces chicken fries to its menu. Chicken pieces are sold 9 to a carton and resemble French fries.
Turning to the economic calendar for today, it's the MBA Mortgage Index. Retail sales, as we mentioned, business inventories and crude inventories. On the earnings outlook, Pinnacle Foods, Cisco Systems, Deere & Company, Macy's, and Noodles & Company. Still to come, one trader is ready to pounce on Apple stock before its new iPhone hits the market. Plus, are the days of the 9-to-5 job over? And after the break, as the earnings madness starts to cool down, a look at where corporate America stands.
Style stock is suddenly not so hot on Wall Street. Shares of Kate Spade plunged 25% after hitting a 52-week high earlier in the session Tuesday. Luxury handbag designer showed off hot earnings, topping Wall Street's expectations. However, sales could slow in the second half of the year.
As second quarter earnings season winds down, Shiraz Mian, Director of Research at Zacks, is here with his update on corporate profits. Good morning, Shiraz.
Thanks for having me, Angie.
Well, we still have the retail numbers to come in from a number of companies, including Walmart, Nordstrom, and Macy's. So what do you see happening there?
Yeah, the retail isn't doing as good as the strength and positive reports that we have seen in the Q2 reports thus far. In fact, in terms of surprises, of the roughly half S&P 500 retailers that have reported, the lowest number of positive surprises have come from retailers. So a pretty grim backdrop for the retailers, particularly for Walmart, that's reporting later this week.
All right, let's talk about the banks. Completely different story. Banks turning in near record profits. What's going on here? How are banks making money?
Yeah, the overall level of earnings for the banking sector has been quite high in recent quarters. In fact, they have never earned as money as they're making right now. A big reason for that is their cost base is very low. And some of the core businesses on the investment banking side, those are coming back. The demand for credit is starting to improve. So as the interest rate picture stabilizes and the comparisons on the mortgage side improve, banks seem well positioned as long as the economy starts showing some signs of some health.
And yet, the XLF, which tracks what's going on with the financials, is actually down right now.
Yeah, the stocks for the financials haven't done as good either. Part of that is the interest rate backdrop. Yields on the 10-year Treasury are trying to make new record lows every day, it seems like. And they need interest rates to move higher, and it's just not happening. So when you combine that with the overhang from the litigation issues, particularly for the big banks, and continued capital markets issues, that's the reason why the stock prices aren't doing as good.
Well, thanks for coming on with that update, Shiraz.
Sure, no problem.
Coming up, the countdown begins to Apple's next big gadget. And after this break, why overtime is becoming a sore subject for corporations. Computers to courts. The Los Angeles Clippers basketball team is now owned by former Microsoft CEO Steve Ballmer. Ballmer paid the most ever for an NBA franchise at $2 billion. The deal was finalized yesterday. The team came up for sale after racist comments were made by former owner Donald Sterling. He was banned for life by the NBA. Let's toss it over to Bill Mahler for the latest scoop on overtime.
You probably heard the story we reported the other day about LinkedIn having to pay millions in overtime to certain employees. They happen to have been misclassified as exempt from overtime. Well, it turns out employers big and small are wrestling with this. Kristen Prinz is a business attorney. She's principal at the Prinz Law Firm. Now, what is it that the rules aren't clear? How is it so many companies are goofing this up?
Well, Bill, this area of law has gotten more and more gray over the years. It used to be really clear. You pay your employees a salary and they are exempt. You don't pay them overtime. They work the hours needed for the job. Now, there are so many employees that are actually non-exempt, and the definitions are extremely complicated.
Now, is this because the definition of work has changed somewhat? Because I know in the tech world, you come and go as you please. It's not clear that it's 8 hours on and the rest of the day off.
That's definitely part of the problem. People are connected 24/7, and employers really have not been doing a good job of tracking the time or communicating to employees when they're supposed to be working and when they're not supposed to be working. Actually, that's part of the LinkedIn settlement. Is LinkedIn has to now start training its employees about not working off the clock and make sure that they understand that if they have been working overtime, that they should report it.
So companies are getting the message now that they better tighten up the rules and definitions. But even if they do that, they're liable for lawsuits.
That's true. If you have employees working off the clock, even if you tell them you're not allowed to work off the clock, if they are working off the clock and you know about it, your company is going to be liable for that.
And there's this retroactive aspect that can be kind of expensive too.
Yeah, you can actually be liable for up to 3 years in back wages. That can put a company out of business.
So this is the Labor Department. Is it suddenly more aggressive in pursuing this? Is that why we're seeing this more and more?
Yes, the Department of Labor really right now is targeting tech companies, in part because of the culture. Tech companies have seen a lot of growth. They've gotten a lot of press for these flexible work-life situations. But really, it sounds like that flexibility means you're working all the time. Yes.
Kristen
exactly.
Prinz, thanks so much.
Thank you, Bill.
Thanks, Bill. The stunning loss of actor Robin Williams is creating heavy hearts. His death prompted Disney chair Bob Iger to tweet, "He was a true Disney legend." While a statement from 20th Century Fox reads, "There really are no words to describe the loss of Robin Williams." The star's films produced more than $5 billion, but the actor's financial picture may have been less than stellar. He told Parade magazine his 2 divorces were costly. He was selling his Napa ranch because he could no longer afford it, and he was taking jobs to pay the bills. Williams will be remembered for giving to charity and sharing his talents with the troops. And according to TMZ, he set up a trust for his children. Robin Williams, gone too soon. In Chart Talk this morning, we have a lot to get to with trader Andrew Keen, president of KeenOnTheMarket.com. Good morning, Andrew. Let's start with Aeropostale. The market is awaiting retail numbers. What do you see in the charts on this one?
Yeah, if you look at the chart, it's obviously pretty bad. It went from $14 to $3, but it seems like it's consolidating at this $3 level. The low is $3.10. Hedge funds and institutions can buy stocks above 3 and above 5. They can't buy stocks under 3 and under 5, certain funds. So if the stock breaks 3, it could really get ugly. But I think it's got a good risk to reward setup, trading right now at $3.50 with a stop under $3.
Intel has been very strong this year. What do you see here? Is it more likely to have a breakout or a breakdown?
Well, if you look at the way that the chart looks, on the daily chart, it looks absolutely great. It gapped higher twice on earnings, got up to $35, then found sellers. Right now at $32.85, I think it's in no man's land. I might want to see a test of the gap level where it was before earnings around $31.80, then see it perform on the daily chart. It's making lower lows and lower highs, so it's looking a little bit weak. I'd rather buy it at that $31.80 level on the pullback, see maybe a day or two with nice volume and a bull candle, or above 35, which is where it had resistance. Resistance becomes support. I think it goes higher.
And when it comes to trading Apple, you are definitely a pro on this stock. So what do you see here?
Yeah, I actually don't have a position on right now in Apple. I'd like to see it pull back a little bit more, around 94.5. I missed the opportunity, when the market was selling off. Apple's going to move with the market. So if we get a correction in the market, Apple's going to go with it. But this is one of the best looking charts. They have the most cash of any stock and company in the world. Also, the iPhone, new iPhone coming out. If it's a bigger screen, this could be a game changer. I think Apple breaks 100 by the end of the year.
Good to have you on the show this morning. Thank you, Andrew.
Thanks, Angie.
That's it for today. Join us tomorrow for the courtroom drama unfolding for film studio Lionsgate over Expendables 3. From all of us at First Business, thank you for watching.